There we go. There we go. Got it going now. Got the voice going so y'all can hear me. Christopher Inks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 20th of January. Y'all have almost made it through the first month of the new year. And we're not dying yet, right? We're not crashing yet, right? A lot of good things happening right now in spite of bad news, right? And so that's what we're going to talk about today. You know, this is what we're seeing here is kind of how bottoms usually appear, how they happen, right? How they build. So we're going to take a look at that. Man, oh man. Yeah, so yeah, we'll talk about all that, man. You know, you guys can join us here at howtotradetowin.com. Actually, if you're really interested, let me see here. If you're really interested in doing it all, getting it done, learning my personal day trading system, which, by the way, man, I've still got to get these testimonials out for you guys. But holy crud, people making money left and right here. We've actually got a channel just for people to put in all the different trades that they continue to enter that they're making money. And man, geez, that thing you got to scroll. And we just taught this just less than 2 weeks ago now. But anyway, so yeah, so that's in there. You can go there. You can also go right here to howtotradetowin.com/T3. That'll take you to this page. Guys, right now, if you're not taking advantage of this, you are absolutely insane. So normally we charge $200 a month for our full-on access to everything tier 3 level, right? Other than the mentor program, of course. But the tier 3 level right now, you can get it for $19.99 for 1 month, guys. There's no auto renew, there's no continuation, nothing like that. You just get in, you pay $19.99, you're good for a month. You don't have to remember to cancel, anything like that. But I'm telling you right now, only do it if you're willing to really jump in there and spend time going through it, because we have a stupid amount of content, guys. There's so much content in there. There's absolutely no way you're going to go through it all in 1 month. But you can go and pick and choose and get everything that you want to get. So at least you're on a right footstep going on there, right? This is part of my mission this year to help 10,000 traders become consistently profitable, right? Sounds like a tall order. I'm telling you guys, we can do this. But, you know, at the end of the day, you gotta step up. You got to do the things that you have to do to make things happen, right? I can show you how. I can try to get you there, but at the end of the day, you've got to make those moves. You got to make those decisions. You've got to take those steps. All right, guys? So anyway, yeah, you can do that there. Again, howtotradetowin.com/T3 will get you this offer. We do have, some testimonials down here, just some of them. It's like, when you're looking on the phone, you keep scrolling forever, right? I'm trying to figure out, well, how many do we put in there? Excuse me. Oh, what a morning. So, but yeah, we're actually working on a whole testimonial system, so that way it's easy to see all of it. You guys can have all that. And then, like I said, howtotradetowin.com/LMT if you're interested in checking out the mentor program on there. The mentor program, guys, it comes with a year of tier 3 as well in it. And just so much going on there. So anyway, we'd love to have you there. By the way, Fiboswani making his way in. What's going on, man? I see you there. You guys might have heard. He's coming in with us here at TWC, so that's going to be fantastic. He's going to be able to add in some of his thoughts and analysis and whatnot in there. Just really it's going to be absolutely amazing. We're excited about it. Hopefully y'all are as well. I can't even talk, right? So let me see here. What do we got right now? We've got, we're going to keep looking at the Fed Watch tool here. Look at that. Up to 9. This is as high as it's been so far. 97.2% chance that the market's putting in 97.2% probability that there's a 25 basis point rate hike in February, guys. Everybody's out there still talking, 25 or 50. A Fed chairman, one of the board members gets on there, 50% still on the table. Man, not really. I don't believe it. Not with the economic news that's been coming out. There's just too much going on. They don't have to. They don't have to. They're going to keep talking, but they don't have to, to put it in there. If they do put it in, more than 25 basis points, you're really just overkill, and they're already overkill on it. As always, guys, the Fed is playing catch up. It's always behind. It's always responding, reacting. It's never, proactive. Everybody's like, the Fed's going to do it. They were serious about they were going to do it. I mean, they're always serious about they're going to do it. Have you guys not figured that out yet? They're always serious. They're always going to do it. And then they never finish doing it. It's like, yeah, we're going to do it. And when it comes time to do it, they're like, maybe not. So, again, guys, stop using that as your reasoning for why, you think one thing or another has to happen. Understand what usually happens. Do a little research, guys. Don't be scared to jump out there and do a little research. Don't be scared to challenge your these presuppositions you have, right? These ideas that you have about the way things work or the way they're supposed to work because, some major TV network said it and other ones picked it up. I told you guys, everybody heard. Money market managers heard. Hedge fund managers heard. They all heard, guys. And at major inflection points, they all seem to herd together. But herding doesn't make you right. And often, especially at the major turning points, that's where the problems get to, right? That's why everybody continues, especially retail, right? Retail herds real bad. That's why they're buying the tops and selling the bottoms, right? If you guys were around in Bitcoin in 2017 into 18, right? So 18 bear market, you'll remember, or you should, when we were down at the bottom at 3,100 and we're telling everybody, yeah, that looks like that's probably a bottom right there, explaining wwhy after the move down and everything. And everybody and their grandmother's like, no, we got to go down. We got to go down. And then price round, got up to the 4,100 resistance. And everybody's like, oh, we're definitely going down now. And if you're retail, you're scared to get in because you really don't know what's going on. But you got the big mouths on social media and whatever saying, oh, crap. Yeah, we're going down. There's no way we're not going to go up. It's getting rejected hard here. What happened, man? Right up through it, right? And then they're like, oh, God. And so then you're retail and you're scared to get back. You're scared to get in, right? Because it's just moving up and you're looking at these bigger daily candles, big candles, right, going up. And then it gets to 6,000, right? And that's where it kind of went across for most of 2018, right? And, oh, there's no way it's going to go through them. And they're going to get so knocked down right there. And, of course, I said, no, it's going to go up. And what I'd said down to the bottom, and I reiterated there, was it's going to cut through it like a hot knife through butter, come back, test it, and continue up higher. What did it do? That's exactly what it did, right? But yet everybody and their grandmother telling you still going to go down. And so now everybody misses 100% rally right there, which becomes exponentially greater as price continues to rally up, right? I think the big problem comes with traders, especially retailers. They don't know what they're doing, and then they say they're traders, but what they really mean is, hey, I want to I want to buy the absolute low price, and then I want to sell the absolute high price. Nobody really ever does that, guys. It's very rare that you even get close to it. All right? But yet that's what you try and do. And therein lies the problem. Therein lies the problem. First of all, you're not really a trader. You say you're a trader, but you're not really trading. Because if you're trading, you don't care that the price is going up or down. You don't care what the overall trend is. You don't care. If you're a trader, you're trading. You're trading whatever that local trend is. Man, I hope this gets across to you guys. Seriously. Because guess what? Here we are, right? So let's kind of take a look here. Let me find my Bitcoin chart here. So let's take a look here. Speaking of, 2018, right? I'm going to pull this up here. Come on, there we go. Do that. This is it right here, right? This is where it was. We're like, oh yeah, this looks like this is probably the bottom here. Everybody's like, no, it's got to go down, right? There's that 4,100 kind of area, and it's got to get down. Big push through, right? Rallies up here. Oh, it's definitely going to get caught right here, right? It's definitely got to go down. Boom, big push up through it. Come back, retest, continues up higher, right? The similar structure we're seeing right over here, right now, right? So, but the problem is, you come in and you go, oh man, here's the big trend. It's going down. All your big, 100 and 200,000, 500,000, influencers out there, follower influencers, are saying, oh, but it's got to keep going down. They were the ones up here telling you, oh, it's got to keep going up. But you guys have short mindsets. You get recency bias. And then you forget about it, right? You have the recency bias there, and then you forget about it. And then it comes down, and then you're in this bear market for a year. And so you're like, oh, I'm a trader, I'm a trader, I'm a trader. Yet you ain't trading. You ain't trading none of these bounces. You're scared to get in when it breaks out here. You're scared to get in when it breaks out here. Guess what? You finally get in up here. How do I know you finally got in? Because look at the volume spike. That's you getting in right here, guys. And that's the bigger market players selling right into you. Because this is what you do over and over and over again. You sell the bottoms, right? How do I know? Volume spike. That's you selling into the bottom, but it's not going anywhere. It dips down, boom, right back up. Right back up, right to this area right here. Look at that. That's you selling at the bottom. This is you buying at the top. This over here, this is you buying at the top. Buying at the top, buying at the top. You can't make money if you continue to act like regular retail traders, guys. If you are a trader, and it's okay if you're not a trader, that's fine. I'm not saying there's anything bad not being a trader, but I'm a trader. What I talk about here is trading. Yeah, sometimes we talk about macroeconomic looks and longer term trends and whatnot, but at the end of the day, I don't care what all that says when I'm ready to trade. If I'm ready to trade, I'm trading what's local. That's the thing, guys. And if you're going to be a trader, that's what you have to do as well. Yes, you can keep an eye on what the bigger thing is, but who cares? You're not investing, you're trading. You're making money today, not in 10 years from now. Now, if you want to, that's a different thing, but don't come around saying you're a trader, right? Because all you're going to do is confuse yourself. You're going to get that cognitive dissonance going on in your head, right? So what happens down here at the bottoms? At the bottoms, everybody says it's got to continue lower. There's just no way it could possibly go up any higher. Just like up here, laser eyes up here. Oh, it's got to keep going up to 500,000 from here. There's no way it could possibly go back down, right? So what do we have? We have this very little move down here, right? On the FTX news, right? Guess what? Y'all sold. How do we know you sold? Look at the volume. And it didn't go anywhere. It barely went down. What that means is there was some big pockets sitting there taking everything you're selling to them. They're accumulating the hell out of what you're selling to them. Are you really thinking you're going to continue going down here after something like this? The odds are you're probably not, especially, again, when we do what we've done before so many times before and we start doing that volume and price action analysis. We start looking at effort versus result, right? So here we go. So what's happened over here now? So now we're going over here, right? And we're rallying back up strong. But what's happened? Oh, Genesis. Everybody talk about, GBTC was going to go, right? They were going to be sold off and, they were going to sell off all the Bitcoin in there, right? And what I said, no, it doesn't make any sense. It is worth more, as a whole, that $300, $400, $500, $600 million a year management fees. That's what it's worth, not the Bitcoin in it. Especially if Bitcoin continues to go up. So if you're a company, you're going to sell off as a whole. You're not going to sell off your Bitcoin. So there's no real fear of it being thrown on into the market, but everybody was scared about it, right? And what do we see what's going on now? Looks like Genesis is gonna file for bankruptcy, right? What's happening? Genesis says, we're going to file for bankruptcy here. Let's see if we can find a little bit of chart here. What's happened? Well, it's continuing to go up. Where's everybody selling? That's bad news, right? Right here. Look at this. Right here. This little bitty drop right here. The DOJ comes out and says, international action we're going to do on exchange or whatever. We got to get these things out of the way. I'll just do this. Okay. Because I want to talk about this dragon pattern, which you don't need any other indicators with that. But, they talk about, that's what's going to be so bad. Everybody was so scared, right? I even had somebody, ask me over in Discord about it. How do you feel about this, whatever? And I said, listen, at the end of the day, they're going to do whatever they're going to do. I have no control over that, so I don't tend to worry about it. I'm a trader. I'm trading it. If it's going up, I'm buying up. If it's going down, I'm selling down, right? I'm shorting down. I can't worry about what they're going to do. That does nothing for me. I don't control it. So why worry about it? As in life, it should be in trading, right? If you continue to worry about things that you can't control in life, you're going to worry about things you can't control in trading. And what's that going to do for you as a trader? Absolutely nothing. It doesn't allow you to focus on what you can control. So again, bad news, right? But then we find out, it was a big nothing burger, right? Bizalto or whatever exchange. Nobody's ever heard of that, right? Some shady Russian exchange. Oh my God, nobody. We're all sitting here like, what? What is this? What is this? Is this like something you can order from Starbucks or something? I don't know. Is it a super villain from the Legion of Doom? Bazalto, right? But you know, and so it becomes nothing, right? But again, it was this big scare, and everybody should have been selling. You know, they tried a little bit, but that's all it was, right? Now we got news that FTX may be restarting as well, right? I mean, so, but the big thing is when you're getting toward bottoms, right? So much the reason why bottoms form is because that move I told you, this move right here, where you have all this selling. I said there's somebody big, they're sucking all that up. Same thing over here. This supply that gets sucked up here, a little bit's put up at the top to kind of keep the range going, but you're net buyer if you're the big guy, right? Here, you're the net buyer, right? So you're bringing in a heck of a lot more supply than you're actually putting back out there, right? And so what happens? As you're coming down here, if you've got retail selling everything they got because they're scared, right? Because they don't know what's going on. They're just scared. So they're going to sell at the bottom. You're just going to collect all that. And then they don't have any more. If Joe goes out there and he's got 10 Bitcoin and he sells it that you know over here because he's scared, guess what? Joe doesn't have 10 Bitcoin to sell anymore. Now, if you keep doing that times thousands and thousands and tens of thousands of people, all that supply is getting accumulated in a few bigger hands, which means you don't have it to put in there, right? So then you have this big fear thing going over here. And you sell it again, and look, they're even more. They're buying it up even more. That's all you get is this little 10% move, 12% move, right? And then what happens? Look, volume drops off. And I talk to people, yeah, well, it's going to rally up. How's it going to rally up? There's no volume. Yeah, there's no volume because there's nobody left to sell into it. What happens? Big move up. This is how bottoms form, guys. I talked about this in 2018. Very few people listen. I'm talking about it now. I just know, again, very few people listening. Very few of y'all paying attention right now are actually going to listen to this. And that's unfortunate. That's unfortunate. Because you're going to continue to lose money. Period. You know, the one thing I'm known for is not telling you what you want to hear. I tell you what you need to hear. And it's not to be rude. It's not to be mean. It's to be realistic. Because if you listen to me and you get your head on straight and you pay attention to that, then you can make sure that you're not making these mistakes. But most people don't. So when I'm asked, oh, aren't you worried that if you're teaching everybody all these secrets, right, how all these things work, aren't you scared that it won't work anymore? No. People have been teaching the same thing I'm teaching right now 100 plus years, or close to 100 years, depending on what it is we're talking about, right? Elliott Wave, Wyckoff, you know, whatever it is, right? Nothing changes. The market still works the same way. Now, you're going to get your people out there saying, oh, market doesn't work the same anymore. Oh, you know, Elliott Wave isn't 5 waves anymore. It's 3 waves. That's such BS, man. That's just somebody trying to get your money. They're trying to come up with a new and novel way to do it. So you'll go, oh, I want to be with them because they sound cool. Guys, I do things the same way they've been done since they were originally taught. I do them the same way today and make money day after day with it because it still works. But most people don't listen. Most people don't pay attention, right? So here we go. We're getting ready to rally up here. Again, I still think we've got this target, you know, based on the dragon pattern here, right? We've got our head, we got our left leg, we've got our right leg, high or low there. We broke out impulsively above the hump. We hit our first target. We hit our second target. Third target's still up there. That's at basically it's 23,933. So basically 24,000 to 26,000 kind of area. Based on this pattern, and I think we still go there. I think we've still got a great way to get there, right? Let me talk to you guys here real quick before I continue on. Who all's here already? Navlusian, Bamboo, what's going on, guys? Data's here. Fibaswani, of course. Is that George? What's going on, man? Good to see you checking in. Let me see here. Bamboo says, LMT, that's our mentor program there, works so fine for me today after you taught me my mistakes yesterday. 4 trades, 4 wins. Boom! I love it, man. He says, I'll post them later on the channel. Can only highly recommend it to everyone who wants to win. Man, I appreciate you, man. I love hearing that. I absolutely love hearing that. Rent Collector, what's going on, man? Kimasabi is here. Fibaswati says the 2.8% needs slapped. He's talking about the 2.8% probability that we're going to get that 50 basis point rate hike there in February. Kimasabi, I made a great choice in including Fibaswani in what I do. Great guy, very grounded and experienced. I've learned a decent amount. Yeah, he is a great guy. He really is. And a big bonus there is that he and I both kind of really come from the same understanding of market movement and market progression and whatnot. And we both are big fans of Fibonacci, even though he's got his own system which uses a little bit differently. We still, our targets basically come out around the same area. So it works really well. When you bring people in, I've done this by myself really. Scott was there for a little bit, but basically for 5 years, 5.5 years now, I've done this myself. And so when I bring people in, I need to make sure that they're people who align with the way that I view the markets, with the way that I look at them, because that's what our people expect, right? If I'm going to entrust somebody else to come in here and say, hey, listen, here's some thoughts and whatever, here's how I'm seeing the market, here's what we think, right? Then it has to be somebody that the people that are with us, that are paying us this money to be there, go, yeah, okay, I can trust in them because Chris trusts in them. And so it's a really, for me to bring somebody on, which is something I've been trying to do, it becomes, and I've got more people I want to bring in as well. But that's the process. That's the thing. That's what we have to get through. Right? Zobia Dollars, what's up, man? Good to see you checking in. Andrew Bennett is here. Always good. Esteban, good to see you, buddy. Let's see here. Let me kind of catch you. Let me see. Diego, what's up, man? Kimasabi says there should be no fear of jumping in. What's the worst that's going to happen? Your stop loss gets hit? I've had worse. Yeah, exactly. And if you're using proper risk management, then the amount that you would lose if your stop loss was hit is so insignificant. You shouldn't even, it shouldn't even be like a blip in your mind, right? The problem is most people don't use proper risk management. That's the problem. And so they go in and they go really oversized position, a lot of times well over leveraged, and so they get liquidated and they lose half or 3/4 of their position of their portfolio in one shot. Well, yeah, I'd be scared as hell of that as well. So you got to have proper risk management, guys. Diego says, "Oh man, join the stream and the first thing I see is this is you buying the top." Yes, that was me. Yeah, but the good thing is, guys, listen. The good thing is I don't do that to make fun of anybody. I do that to be realistic here and get you guys to look and go, whoa. Because a lot of times we tend to ignore the things that we have to pay attention, that we should be paying attention to, because we want to be right. Because to be wrong means, one, we were wrong probably publicly, right? Two, it means we lose money, right? It means it's our recognition that, one, we didn't know what we were doing, and or two, we didn't properly approach the trade. And most people don't want to admit that. It's hard to admit. It's hard to do that type of thing, right? It's hard to say, man, yeah, to admit to yourself, I knew better, I shouldn't have done that. Yeah, man, it's tough. Most people, guys, I'm going to tell you right now, most people refuse to do it. They spend their lives refusing to do it. They come into the market, they lose their money, they get back out, they continue. It was what they did before they came in, it's what they did in the market, it's what they did when they left. Your life and your trading life are the same thing. How you view one is how you will view the other. So if in your life, if you refuse to acknowledge when you've made mistakes, if you refuse to learn, don't even come into the markets. Because I will take your money all day long. I will not even feel bad about it. Because you are an adult. You should know better. Most adults don't. They don't want to. It's comfort in ignorance, right? Ignorance is bliss, right? Everybody encourages you to blame everybody else. Here in the U.S., we've got no fault insurance. No fault? Are you kidding me? Of course it was somebody's fault. It was something's fault that you got into a car accident. But guess what? Here in Texas, it's no fault. My insurance, even if it was you not paying attention and pulling out in front of me, guess what? My insurance goes up. No fault divorce can't possibly be anybody's fault, right? Well, hell no. It's everybody's fault, right? It's at least somebody's fault, if not both people's fault, right? But no fault makes it easy, right? You don't have to blame. You don't have to worry about it. You can blame it on the other person. You don't have to take responsibility for yourself. Are you kidding me? And you guys wonder why we're having so many problems throughout the world. Lack of that whole personal responsibility thing. But I'm telling you, if that's the way you are in life, that's exactly how you're going to be in trading. And that's going to make you no money. It's going to lose you all the money you have and more. Okay? Starbucks Exchange, Andrew Bennett says. There you go. Don't get me tempted. Oh, by the way, speaking of news, Davies and Suzu there, whatever. What's his name? Anyway, the guys from Three Arrows, right? Starting up their own exchange. I mean, are you kidding me? GTX? Are you kidding me? A, B, C, D, E, F, T, X, G, T. I mean, are you kidding me? God, man, I wouldn't want to touch that with the 10-foot pole. But here's the thing. Now, I'm a big believer. I'm an entrepreneur myself. And so I've failed multiple times in my life getting businesses going, right? I mean, every entrepreneur has, guys, okay? And that's not a big deal. As a matter of fact, for me and for most entrepreneurs who have become successful, we prefer to hire people who have tried and failed a few times, because you learn from that failure. And you learn especially from the failure, and you get back up and you do again and you work again. That shows your character, that shows something about you, right? In this case, though, these guys screwed a whole bunch of people out of a whole lot of money with their nonsense. I mean, I'm like, man, I don't, even though I feel the way I do generally about entrepreneurs, I'm not a fan of this. I mean, and a lot of people are, thankfully I didn't have money on FTX, right? But a lot of people did, a lot of money, right? People are really raw from that. Do you think they really want to trust these guys who did what they did at the height, so over leveraged and whatever, and did what they did and caused all this damage, right? And then we get FTX doing their thing, and then these guys going to go create exchange. I mean, are we really thinking, yeah, that's something we want to do? I don't know. Yeah, I think it's kind of crazy. But this is where, personally, you kind of make those decisions. Do you want to do something or not? It doesn't mean they can't do it and become successful and whatever, and they might. But, it's like the same way I feel about trading, BSV or BCH, right? It makes great movements. I cover BCH daily for, tier 2 and tier 3, the charts and everything, but I'm not comfortable buying it. I don't like the people behind it. The person behind it. I don't like the person behind BSV, right? Those people rub me wrong. And so I don't want to do business with them. And doing business with them is buying or selling their product. Again, it doesn't mean that Davies et al. Can't be successful with GTX, but man, oh man, at least right now, I really don't have a desire to be involved anywhere near that. And hopefully they'll be successful. Hopefully they won't screw it up and again take down the market, right? But man, the track record isn't exactly exemplary at the moment, right? So I don't know, man. I don't know about y'all. What do you guys think? Let me see here. Deadly123, what's up, man? He says, if you haven't seen Tier 3 lately, take the promotion. I did, and the new wave of content is amazing. Chris, I knew you worked hard, but had no idea you were working this hard. Thanks for running promotion. Hey, man. Yeah, I appreciate that, man. Yeah, again, guys, so many members we have been with us since day one, or at least, 3 years now. And they stick around for a reason, right? They don't have to stick around and keep paying, but they do. I prefer to use that as a why should you join? Well, because people are coming in and staying in, so there must be some value in there. I can tell you all day long that I've got your best interest at heart, that I really do everything I can to help you be successful. But that's just me saying it, right? You don't know me. But other people are constantly in there and staying in there. And they're, on occasion, actually stepping out and writing things. You guys have to understand, testimonials are hard, right? Because most people, they only go online and say something about somebody if they're not happy with them, right? It's hard to get somebody, because it takes time out of your day. You have to, in order for somebody to write something, they have to actually think about it and then do it. They have to take the time and the effort to do all that. We're all busy, right? That's why most, testimonials or comments are usually bad, because you're pissed off enough of either somebody did wrong you or you perceived that they wronged you, that you're so pissed off that you have all that driving you to do it, right? So, it's kind of a crazy thing. I've never actually pushed testimonials. I think we're going to start pushing them, though, because it's not fair to everybody else out there to kind of come up here and think, well, man, maybe, it sounds great. I like what you do, but man, I don't know. I've been, scammed over by this guy and that guy. So, I think it's probably done a disservice to y'all by not actively collecting these things to let you know what people think. So, yeah. I mean, you're always going to have people that don't, like I said, either somebody has really wronged them, or most of the time they've been perceived, or they perceive that somebody's done them wrong, right? You guys understand that a lot of times the way we view things is not really the way things are, right? You guys know, not just in trading, but in life. Yeah, it's that whole psychology thing. That's what we're going to work real hard on in the LMT program this year. And every time. By the way, guys, you haven't missed entering it. You can join whenever you want. It's an evergreen program. And so certain things are going to be recorded that you need at the beginning. And then we've got our weekly sessions. We got Trade With Me on Mondays and Wednesdays in the morning. And then on Friday afternoons. As a matter of fact, here at 1:30 is when we'll have our one this Friday. We're going to discuss whatever, usually psychology, the system itself, take on questions, stuff like that. So a lot of good stuff going in that. We've got other stuff coming up with that as well. Let me see here. Dennis Hurley, what's up, man? He says, boom. Hank, what's going on, man? Fernando, good to see you. Chris is the best in the trading business. I appreciate that, man. I'm still I still have a lot of difficulty, like, you say something like that, and I'm like, oh, okay, red face and everything. I'm not a natural born promoter. It's something I'm working on. But I just one of those guys that just put my head down and I work, right? So a lot of the marketing you guys are seeing over the last few months, and you're going to see a lot more of this year and ongoing, is something I've made it my mission for myself to work on and to get out there, because again, I think I'm doing everybody, the current members and potential future members, a disservice by not marketing like I should. So yeah, we're going to work on that. Peyton Pierce, what's up? Coming in from East Texas. That's me, over leveraged even still. Bought in again this morning. Stop with the over leveraging. If you know it's happening, guys, if you recognize that you're doing something you shouldn't be doing, you have the fact that you recognize it means you have the opportunity to change that. Okay? So the first step is recognition. And again, that's what I was talking about earlier. Most people refuse to recognize the truth, the things that are going on, because it means they have to admit that they were wrong, or that they were lazy, or that they did something wrong, not fully like they should. And that's a tough thing for most people. So the first thing is recognize it. And once you recognize it, you can forgive yourself. And if you forgive yourself, that means you're going to pay attention and figure out how to change that. It's everything. Nobody can do any of this for yourself, guys. You have to recognize it yourself. I can tell you all day long, here's what you're doing wrong. But until you accept it and recognize it, it's all empty coming into you, right? You have to, like I said, recognize it. You have to make the decision to change, and then you have to change, right? You have to take the steps to do it. 3 things are required to get better at trading, and all of them are on you 100%. Absolutely nobody can do. There is absolutely nobody out there that can do any of those 3 things that you need to do. They can't do it for you. You have to do them all. Raj, what's up, man? By the way, where are you in East Texas, if you don't mind sharing, man? Because, I'm hanging out over here on Lake Conroe, so just north of Houston there. Raj, what's up, buddy? Similar to Deadly 123, took advantage of the promo. Oh, yeah. I've been watching Chris for years now. Finally bit the bullet. The value he offers as a mentor analyst is miles above the rest. Man, I appreciate that. Thank you, man. Thank you. I really do. I need to grab the HTX domain name. Yeah, right? FTX, GTX. Might as well get HTX, right? Hank says, I think you can trade FTX claims there, so a bit of a warped yet interesting concept, and they're looking to add Celsius, Genesis, etc. Oh, and at GTX? Eventually become an exchange where you can trade bankruptcy claims in a broader sense even. So, this is interesting, the bankruptcy claims, right? So you guys, if you've been following me for a few years, you may have remembered a few years back when all the Tether thing was going, right? And I told you guys, I said, listen, at this point, we've gotten so far into the other stable coins that I don't even think that an implosion of Tether would kill off the market. It would certainly hurt it a bit, but I don't think it would kill it off, right? And so at the time I talked about how that would work, right? So if you had Tether and Tether, died off or whatever, and then you're like, man, so I'm holding this worthless Tether now. And I said, what would happen is, you go to court and everything, and bankruptcy and all this other stuff kind of goes on, right? And I said, basically what happens, you're going to have people like me, potentially, down there at the bottom, paying you pennies for that, right? Because the odds are there's going to be some kind of settlement agreement. There's going to be some kind of return on that. Now, there's no guarantee, but most likely there would be. And so if I'm buying, let's say you have $100,000 in Tether, right? If at a 1-to-1 peg, right? You might be willing to sell it for 10 cents on the dollar, right? 5 cents on the dollar. So I'm going to pay 5 or 10 grand for you with no guarantee that there's going to be any kind of bankruptcy or any kind of, return on investment, right? But the odds are generally there usually is. And so all of a sudden, maybe you're getting back 40%. Well, now you've sold it for your 5 or 10 cents on the dollar, right? And I'm making 40 cents on the dollar, right? So this is the same idea with these bankruptcy things right now. People are scared. They want their money. They think maybe they're not going to get anything, and maybe they won't. But many businesses are structured this way, where they buy this kind of debt, this bad kind of potentially non-paying debt, right? And they pay you pennies on the dollar, so you get something, right? Or you could hold it and it goes through court and hope that you get something out of it. But here they're guaranteeing you today. It might take 5 years, 10 years for you to get. Look at freaking what's it called? Mount Gox. Look how long this thing's been in court. They still ain't got it yet, right? And then it got extended again here, the payout, right? So, it comes down to you as a holder. And most retail holders, they're like, well, I'd rather take my few pennies now and just be done with it. But the business savvy, they look at the situation, they figure out what the odds are for them to do that. And if the price is right, if you're willing to sell for the right price, they're willing to buy for the right price. So yeah, I mean, nothing surprising on that at all. Again, same thing we were talking about when Celsius and all that was going on, or what would likely happen with people buying up that debt and everything, and those claims, still getting that. Yeah. Mark, what's up, man? Good to see you. Hank says it's not a crypto exchange. They're talking about GTX. Yeah. Jay Andrew, what's up, man? Good to see you. Fibaswani says our actions and results are a natural promoter. Exactly. Michael, what's up, man? He says, wouldn't the market absolutely rip up because people would have to sell Tether into other assets? They would have to. I mean, so here's the thing. Who's going to take the Tether, right? Who's going to take the Tether? If Tether were to implode, these exchanges wouldn't touch it. They'd be like, nope. Yeah, they're going to delist anything Tether related. Who's going to take it? Some people would get out early. Yeah, maybe. But most of the people would be stuck with Tether. Because who the hell's going to take it? If I'm Coinbase, I ain't got to take it. If something like that were to happen with Tether and I'm Coinbase, man, I'm probably like immediate, the exchange is going through non-planned maintenance. You can't do anything. And then you come back online and say, oh, by the way, all Tether pairs are removed from the exchange now, right? Yeah, I mean, that's what you kind of look at, right? But yeah, if they had to sell it into it and doing it, I mean, maybe you would. Yeah, maybe it might get a brief spike and then a big push down. But who's going to take Tether, right? Let me see here. Edward Park, what's up, man? Good to see you checking in, buddy. Hank thinks that tokenizing the claims and making them tradable is interesting. Outside of crypto even, and as you said, they have the experience and everyone has dirty hands. VCs don't mind. Yeah, it's all about money, guys. It's all about making money. It's just what it is. It's not bad, wrong, right, otherwise. It's just what it is, right? Sylvia, good to see you, man. Andrew's saying, wait till government creates or adopts a stable coin, then it's probably time to get out of their stables. Yeah, well, that's coming. So anyway, let's jump back over here at Bitcoin, guys. So here's another look at Bitcoin, right? So we've got, this is just using regular pitchforks, right? We do this every so often. So as you can see, we had this nice move down, right? And you had the working as resistance here, and then you got the pop out on volume, rallied up to the top of that resistance, right? Of the pitchfork here, pulled back, and then rallied on out, and so this creates this other pitchfork heading up, right? And if we look at this, you can see that where we actually broke back into the pitchfork here was where we got the volume and the price action, right? It's where we got the volume and the large candle spreads. Boom, break into it. Again, more high volume, more large candle spread through the middle, and rallied all the way up into resistance, where it's just kind of gone sideways here, and now attempting to break out again, right? So I still think we have higher up. Let me pull up a different chart here, guys. Oh, I got lots of charts for you today. It's Bitcoin, right? Let me see here. Is this the one I want? Nope. So this is the one we're currently at. Here's what I'm looking at locally, guys. So, you know, I'm long, like I told Discord, I've been long here. So I was long off the low here. I was looking for the move up, and then we got the pullback, and so it, you know, hit my stop loss that I moved up, right? Went in long again down here. Here we go rallying up, looking for a breakout above 21,562.79 if we can get that. Looking for a rally up toward 22,643 and a half or so. And then a pull back to the range resistance here around 21,850. And then a rally up here toward 23,180. And that would complete then that wave 3 right now. That's the wave 3. Let me kind of just get back here a little bit, get a little bit larger time frame for you. This is the idea that this is that 1, 2, and 3 up here, right? This right here, so what I think happened here, I'm still not really happy with the idea that this is like basically, you know, half a day or whatever pullback here, and this is 11 days. But right now, I was looking at this as maybe like an A and a B and a C as a running flat, and it could still potentially be, but I think right now I'm looking at this as a leading diagonal. So subwave 1 of 5. So you get a 1, 2. And that would give us a 3 up here at the EQ of this blue supply structure. 4 brings us back to the range resistance. And 5 takes us up here of 3, right? 5 of 5 of 3. So again, 3, 4, and then 1 is a leading diagonal. 2, 3, 4, 5 of 5 of 5. Or 5 of 5 of 3. By the way, if we do that, then we're looking for wave 4 to kind of pull back, which makes sense right back to this base here, right? Right back around 20,536 or so. And then that gives us almost exactly a wave 5 target up here at this purple structures EQ, this purple supply structures EQ right around 24,750 or something like that, right around that area. So yeah, I mean, you know, and so what does that do? Well, that gives us then 5 up here. So then we go 1, 2, and then 3 on the breakout, right? Let me see here. Thought I had another chart in there with that. Oh no, it was this one right here. Let me jump out here. Let me jump in a little bit. There we go. That's kind of the count idea there, kind of fleshed out on what we're potentially looking at here, right? Count's a little bit different here, but generally same idea. You know, I'll be fleshing this out as it continues to move. But the idea being that, again, you've got this as a... Oh, I did that wrong. There we go. 1 up here, right? So the idea, again, is that you've got this as a 1, 2, 3, 4, 5, right? So this is a 1, 2, 3, 4, 5 gives us 1, 2, 3, 4, 5 of 5 here. That's what that is. It's not that this is all 1. This is, again, 3, 4. This is 5, and then this is, or right here, right? 3, 4, and then you got 1, 2 heading up. But nonetheless, again, and kind of seeing how it would maybe play out along this pitchfork here, right? If it's just to hit the, you know, the absolute general levels that we look for, you know, wave 5 is a 61.8 extension of wave 4. Wave 3 is, you know, 161.168. I lost my train of thought there. Anyway, the general extensions we look for. Wave 4 pulls back 38.2, you know, stuff like that. I mean, this is kind of what we would be looking at it doing here. And so it makes a lot of sense. Does it guarantee this is what's going to happen? Not at all. Not at all. Not at all, guys. But it does give us a potential path, and the path does align with these areas of support and resistance that we would be looking at. So until it doesn't, we continue to watch it, right, in such a way. Let me see here. You're way up in Jefferson, Texas, playing music in Tyler tonight? Oh, man, that's awesome. About to sign up for the promo? That's awesome, man. I'd love to see you in there. Let me know. And is 5 to 7 times leverage way too high considering we might be near the bottom? So the way I generally view leverage is that leverage first and foremost should be a way for you to reduce your counterparty risk, right? So if you're on an exchange, FTX, and you don't want to hold your money on that exchange because, or quant whatever it was up there in Canada, right? The guy died, the CEO died, and he supposedly had the passwords to the cold wallets, right? So if, but in order to change on to trade on the exchange, you have to put money on the exchange, right? So the idea of leverage is, listen, I'm going to put as little of my own money on there, and for the position size, use the rest as leverage. It's not that you're using leverage to increase your overall dollar return, right? You're just trying to increase your percentage, your return on investment, right? And that's the way I approach leverage, and that's the correct way to approach leverage. If you're going on leverage and go, man, I'm going to use it to make 10 times my money on the next trade. Well, again, the problem with that is you're going to lose potentially 10 times what you're putting at risk there, right? If it goes the other way on you. So it starts with proper risk management. Proper risk management starts with, okay, we have to understand where we are in structure. And by understanding, we go, okay, well, here's where I want to enter, because this makes sense to enter here logically, right? Based on the structure and what's going on. This is my target based on, again, however I'm looking at the charts. And then here's my stop loss, because that's where it should be, not because that's where I need it to be for a monetary thing. Your stop loss should always be that point in which, when the market turns against you, at that point you are wrong. At that point, it invalidates your narrative for what you're looking at. So for instance, if you're using Elliott wave, right? And let's say, we're down here and you decide you want to go long, right? You think this is wave B here, you want to go long on a breakout there. Well, if we're looking at this time frame here, your stop loss has to go right below wave 2. Not over here, not over here, not over here, whatever, not up here. Because you're looking at this time frame. And this time frame, you think this is a 1, 2. And you think this is an A, B, C. So if you think that, then you know that dropping below what you think is wave 2 would invalidate the way you're looking at your reason for trading, the reason for entering that trade. And so your stop loss would have to go right there below wave 2. And once you know your entry, your stop loss, and your target, you can then correctly identify the position size. And then once you know your position size, you can then use that to figure out how much leverage you can put in there to take off that counterparty risk without introducing greater loss for you, right? The total dollar loss, right? Because think about it, guys. If you have a position that your position is $1,000 that you're buying in, right? So if it hits your stop loss, you lose $1,000, right? And no leverage. But if you're only putting in $10 and you're making up the rest of that $1,000, or let's say $100, right? 10% of it, right? And you're making up the rest of that, the $900 with leverage, and you hit that same stop loss, you're only out $100. You're not out $1,000. And if the exchange went down in the meantime, FTX or quant, whatever that was, or whatever, these types of things, well, guess what? You're still only losing that $100. If you had a $1,000 position that you put in all on your own money, you'd be out $1,000. That is the goal for risk management, guys, for leverage, is to reduce that counterparty risk, to increase your percentage, ROI that you're getting, not your overall dollar return. Because guess what? If you only put $100 in there, you can take 10 more trades at $100 with that same leverage, and you would have to lose all 10 trades to lose $1,000 instead of just losing $1,000 on one trade with zero leverage. Anyway, when you come in, man, we've actually got a risk management section where I go into detail about that. And guys, pay attention here. I'm going to actually release a how-to with leverage. So you guys be watching that. I'll put a post up. I'm trying to get it done this weekend. But that'll be free for everybody to check out. So be watching for us on social media or in Discord or whatever when I give you guys the link for that. Because I think it's like so important. So many people misunderstand leverage. You got large accounts out there with 2, 3, 500,000 followers saying, oh, leverage is terrible. Leverage is terrible. Well, it's terrible if you use it like retail normally uses it. But if you use it correctly, in line with what I was explaining there, that's how you're supposed to do it. That's how it works. So yeah. Anyway, would love to have you there, man. Let me know if you sign up, okay? Eric, what's up, man? I dropped 5 years with that beard trim. Oh, Quadriga. Yeah, that was it. Up there in Canada. Mark, you're up there in Canada, right? I think that's how you know, right? uh, Bamboo says news just came out of 3 people going to SBF's home and trying to do something to him, but they drove away after confronting security in his parents' home. Yeah, you got to be stupid if you go after him. I mean, he's got all that security out there. Yeah. I mean, oh my God. We'll see what happens, right? Hank, you've got a chart here. What do you got? Prettiest pitchfork in the land, you said? Oh, this big one coming off the top. Yeah. Same idea. Notice right here, guys. Notice on this pitchfork, notice where that middle tine is. So if you guys follow me, you know I like channels. I think channels are the most underused, properly used channels. Most of the way that you guys see most of these accounts online, especially the big influencer accounts, use channels is not correct. The way they draw them is not correct. But again, that's something else we go through with everything we teach, right? But, a pitchfork, I mean, this is, I put it up here so you can see me pointing at it, right? This right here is a channel. That's all this is right here. And the most important reason for a channel, the most important part of the channel is the equilibrium. It's the EQ. It's the middle. Again, I explain why. But in this case, you notice we get resistance, support, even though it dipped down this lower, this middle tine here. It's probably what, I don't know, what is that, 33 or 25%, something like that there, Hank? But anyway, and it pops back up. So basically, effectively this midway here is holding. Look at how well this is working. That's why Hank said prettiest, right up to here. So yeah, if you're breaking out with conviction here, should be good to go, right? Here's the thing, guys. I talk about these targets right here, but this wave, wave 5 could overextend. And I mean, I think that's a real possibility. If the count I have is correct, I mean, there's a lot of possibility. I mean, I don't know. I guess maybe you could get stopped here, right? But see this low volume node right here? Low volume nodes act as magnets. They pull price up through them to the next high volume node. That's what they do. It's inefficiency. It's where prices really just rallied up and the market didn't pay a whole bunch of attention, didn't care much about testing the levels there. And that's what gives you, again, what you guys used to call those BART and Marge and whatever things, right? It's the reason why right here, now, if you were to get this picture local instead of all this here, but you'd see that we have a low volume node that goes right here. Because you had the big move down, big move up, right? If you're just looking at this area, there's not much going in there. So it makes it easy to pull it up into that high volume node area. Now, the other idea here on this, let me see if I can find this here again, find this chart. Yeah. Now, I'm looking at this again as the idea that we've still got 1, 2, 3, because I'm just not happy with the length of time. Again, this is 11 days. Wave 4 should be at least, around 3 days. There should be some geometrical constant, right? And what I mean by that is they should look, there's a certain way it should look, right? If you've got 11 days sideways on one pullback, your next pullback should not be a day. You see what I mean? It should be, it's not going to be 11 days. It's going to be less than that. But it should be a few days out. It should give you, you should be able to look at the chart and go, oh yeah, we're going sideways there for a bit with it. But, maybe this is what I was talking about. The idea that you got, that this 3 is right here, and this is 4 is some sort of flat. And then it gives you a 5, and basically you're just looking up here around this area where we're already going anyway. Now, I don't have to know which one of those is correct right now. I just have to know in either case, we're targeting up here. Okay? And so, yeah, I mean, for me, I like the progression of the 3, 4, 5 as a 3, 4, 5 and heading up here. Again, up here, that's what, 26,650? What were we looking at on Hank's up here? Yeah, see, that would take us right to the midway point here. Right? I mean, it could. But usually if we're going to get there, I would expect to pull up into the high volume node. And so if we're breaking out again, you have, like we had here, the inefficiency, right through it. You have inefficiency right here. So breaking out, remember, this is bearish market structure coming off the top here, right? We got a high, low, lower high, lower low, lower high, lower low, right? So if we break out above this, on Coinbase, that's that 25, 214, and 57 cent area. If we break out above that, that breaks that bearish market structure. Now, there are a lot of ways to look at the trend, right? All we're talking about is trend. we're still overall in a downward trend off here on the large time frame, right? From the all-time high. But you break out above, say, the 200 daily or the 200 weekly MA, right? These are things that we look at to generally say, well, I think that downtrend's probably broken, right? Market structure is another way you look at that. Because, again, a trend is just higher highs and higher lows or lower highs and lower lows if it's going the other way. So when you break over the last one or break through the last one, you can't make another one lower, right? If we break out above this, this is the last lower high here. This is not a lower high because this is not a lower low. This is the lower low. This is the lower high. This is a higher low over here. So even though this is lower than this is a high goes, we haven't made a lower low yet. Okay? We get that down here. And so that leaves, again, this is the last lower high. That's why that's where the market structure is. That's where when you break that, you've broken that downward trend of lower lows and lower highs. That's why that area is so important, why I've been talking about it for months. Months and months and months, ever since we made it, I've been talking about that. That's why. And especially more so once we broke down below here, because that solidified it as the last one. Until we broke down below this swing low here, over here, it was possible this was the last lower high. Because you know, last lower high, and then you made a lower low, and then a potential lower high, but that doesn't become a lower high until you break down below the lower low. Once we did that, there it is. So again, you know, these are resistance lines, right? Another way we look at it, right? Resistance lines. Another way we look at maybe the trend's been broken. So lots of different things coming up there. But that's definitely the structural area that we would look at. Let's see here. Most Twitter TA large accounts cherry pick weird channels to fit a narrative. Fibbleswani says, yeah, they do. Not only that, but they use weird time frames. Guys, if somebody's out there constantly saying, oh, well, here on the 5-day, time frame, 5-day, who the hell uses 5-day? It's hard to get people to use a 3-day. Don't listen to them. Oh, yeah, well, here on the 8.5 hour, are you kidding me? Listen, guys, generally people use, when they're doing proper TA, they use, like the 5, the 15, the 30 minute, right? Then you go hour, 4 hour, and then you jump up to the daily, 3-day, weekly, monthly, right? I mean, that's really it. Now, if you're Elliott Wave, sometimes you'll see Elliott Wave use like a 2 hour, okay? That's okay. That's halfway between 1 and 4, right? Or I'm sorry, that's halfway between 0 and 4, right? Sometimes the 12 hour, I know Hank likes the 12 hour, and you can use the 12 hour to kind of get a little bit more info leading into the daily, okay? But I mean, when you start seeing people use all these other crazy things, the 46-minute timeline or so, I mean, just don't. Just don't even listen to it. Because what they're doing is they're trying to find a narrative. They're trying to find a time frame that fits their narrative, right? There's one account in particular right now that I'm just like, I'm actually getting frustrated with them. It's crazy. They've got over 200,000 followers. Worst absolute TA I think I've ever, well, probably not the worst I've ever seen, but oh my God, it's so bad. I mean, they're constantly wrong. But they've got such a bearish mindset. And then I have to think, okay, are they really this bearish? Or are they just trying to get attention, right? Because if you're an influencer, or if you're somebody trying to sell something, right? It's all about attention. It doesn't matter if it's good or it's bad. You want your name in people's mouths, right? That's marketing, right? But I look at it and just go, man, with over 200,000 followers, if he's just saying big bearish things just to say them, to get people to, say whatever, I mean, that's a huge disservice to people who are coming to actually trying to. People, unfortunately, they go, oh, he's got 200,000 followers. It must know what he's talking about, right? Or she or whatever, right? No. It's a fake picture, fake name, whatever. You know how that goes online, right? I don't know. I personally, I can't do that personally. I feel like some sort of responsibility if I'm putting information out there. So, but that's just me, and we know how that usually works, right? Let me do this. I love some of the people on Twitter with their TA using a crayon. Yeah, so your 923, your 9.23 time frame fits perfect, Fibbo. Man, drawing lines on the phone in the bar on a Friday night, yeah. By the way, guys, can I give you a bit of advice? Would you guys mind if I gave you some advice, like some legit trading advice, honestly? You guys wouldn't mind that, would you? Listen, here's the thing. Don't trade on your phone. Period. Not even, I'm just real quick. Don't trade on your phone. Don't trade on your phone. Period, end of sentence. You don't have a reason that you can give me that you should be trading on a phone. Oh, but I don't have a laptop or a desktop. Get one. Stop trading on your phone. What we find is most people make mistakes. They find FOMO. Their emotions have easier control over them on the phone because they have the phone with them everywhere they go. And they can jump on whenever the least little bit of news or something, they can jump right on and do it. Also, on the phone, it tempts you to just look really quickly. You don't take a lot of time. You're not sitting down with the purpose of looking at the chart in a way that's going to make you money. You're trying to just do it quick. Don't trade on your phone. Okay? Guys, I know for some of y'all that's going to require a change in the way you do things. But if you legit want to stop bleeding money, one of the simplest things you can do is stop trading on your phone. Okay? You feel attacked, you're on your phone all the time. I know. People are going to feel that way. But again, I feel a certain responsibility if you're here listening to me. And one of those things is trading on the phone, we found, tends to lead people to make really bad decisions. They tend to be emotional or decisions that just aren't really thought out very long. Again, when you sit down at a laptop or a desktop, you have to sit down there and make the decision to sit down there and do it. When you have your phone, you get on social media, flip, right? You get on, whatever, your order app, right? Amazon, flip. You get on your, Grubhub or something, flip, right? You get on your charts on your trading account, guess what you're doing? Flip. Tell me I'm not right. You don't sit there and look at a chart for 10 minutes. You look at it for like, 10 seconds, 15 seconds, whatever it takes. Oh my God, this news thing came out. I saw on Twitter. I need to jump on my phone and jump on a trade. No, stop. Okay? It's going to help you in the long run. You will notice that you'll be taking a lot less bad trades if you don't do it on your phone. Okay, guys? Blaze, what's going on, man? Good to see you. Name, Mr. Wilkes. Good to see you as well. Peyton says, sometimes I use prime or Fibonacci numbers for fun. So far, the buy-in this morning looks good, though. You're in on Litecoin, Sand, and a few more. Yeah. It's. I think we got a green day. I was saying that, today, early this morning. I think that's cool, that we're doing that. I think we'll get that. Anyway, I'm talking all over myself here. I know it's tough. But, again, most things in life that are better for us are tough at first. They really are. You guys know, again, I'm not just about trading. I'm about life, right? Because honestly, the way you view your life is how you're going to view your trading and your charts. So if you don't get control and do the things you have to do in your life, normally your day-to-day stuff, your relationships, your work, your business, whatever it is, your health, you can't possibly expect to do it with trading. Your brain won't have any. Your brain doesn't go, oh, look, all of a sudden trading brain's on and I can do all these things that I wouldn't normally do in my life. No. Discipline, consistency. In trading and in life, every aspect of it. No excuses. Okay, guys? You have a giant phone, though? Yeah, so, again, a lot of the things, guys, that are going to make a real difference in your trading are the emotional and psychological things, not really the trading things, not the mechanical systems and doing it. Because a lot of times you understand the rules and the guidelines of Elliott Wave, but you can't function properly because you haven't trained yourself to be disciplined and consistent. So even though price should do this based on what you think the structure is, you refuse to allow it to happen. You don't get in a trade or you stay in a trade longer than you should Because, oh my God, what if it keeps going up? Well, oh my God, what if it does? So what? You locked in profit. You are already ahead of 9.5 people out of every 10 just by locking in profit. You want to be a successful trader? Consistently lock in profit. Stop hitting for the fences, swinging for the fences. If you don't understand the significance of these things I'm talking about right now, last 5 or 10 minutes, man, oh man, you guys are missing out. This is the stuff that makes a difference. So hopefully you guys are paying attention. Let me kind of get up through here with some other charts. Let's take a look at oil real quick, okay? God, I'm still trying to get used to this all my layouts thing. It just keeps throwing me off. Where are we at here? So oil still kind of doing its little rally here. Now oil, I'm not married to the idea that the top's in, right? I'm not married to that, but look at the structure. I mean, it's a pretty good structure, right? You had sideways here, and you came down. You had sideways right below it. You're coming down. You're going to rally up into it, maybe a bit higher. So we go down. Right now, I've got this as like a 1, 2, 1, and maybe a flat here as a 2, heading up toward that, up there around $100 or so. I'm not ruling out the idea that we can't potentially break out higher. But if we did, if I'm looking at this would have to be like an A, a B. And then this would have to be like, 1, 2, 3, 4, 5 maybe here. But I don't have to know for sure if I'm right or not. I just know that in either case, we're likely heading up to around $100 at least right now. Again, this is the great thing, especially if you have Elliott wave and you understand Elliott wave. You have possibilities. And you look at different possibilities, but at the end of the day, whether you're right or wrong often doesn't matter locally, right? Because whether you're right or wrong, it's going to go in that direction. And that's one of the best ways to use Elliott wave, once you learn it properly. So, I mean, oil, yeah, if I zoom out here, daily's already sold out there over top. Now, here's what I'm looking at. Take everything else off here, right? So you can see that you've got this 93.61 here at the weekly pivot, right? That's that area right there, right? Here's my thought. If we break out impulsively above that pivot and can rally up to the R1, my thought is we're probably going to do this, back to the pivot, and then break out. So regardless of what the counts say and the possibilities, and either way, blah, 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 if I just revert to how things usually happen with pivots, if we break out impulsively above that weekly pivot and we rally up to the R1 pivot area, and then we come back here toward the pivot and bounce, look for the breakout again here. If we do that, boom, 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 there is no reason you shouldn't be looking for a new all-time high. This becomes some sort of pullback here. And again, you just have, at that point you have to kind of figure it out. What's the game here, right? I don't know. Maybe this is ABC as a W and this is X, and maybe this is ABC as Y. Right? Maybe. But I don't have to know that. I just have to know that likely rallying up here. And then we watch, does it get that impulsive breakout here? And if it does, we look for a target up here. So we don't have to understand really if we're going to break out or not. We're just saying, listen, if it does that, then if that's bullish, then we should get this. Once we get this, one of two things will happen. If it's super bullish, it'll continue rallying up. It might hit the R2, pull back the R1 area, and then continue higher. In which case, if that were to happen, you should be looking at the R5 pivot, most likely. If it hits the R1 and pulls back to the pivot, and then breaks out above the R1, there's a good chance we'll hit that R4 or R5. But if we break above the pivot here, maybe go up the R1, and then break back down below the pivot, we should likely be looking for a lower low here coming off that. By the way, like I said, guys, I've got a course I'm putting together for fibs. For pivots. It's going to include stuff like that. A lot of things that it's this big deep dive, in depth, how do you trade pivots thing. Again, that was my thing for 2 or 3 years there, right around the GFC time, right 2007, 2009 kind of area. And I learned so much just by trading that over that time, and I'm going to share it all in that. I've also got a moving averages thing I'm putting together, guys. And that's going to be something like 30 or 50 different ways to use moving averages as, in different, with different indicators as systems. This is how you use it with this particular indicator. And you can use it by each of those by themselves, or you can use them, overlay them on your current system to help you understand the trend and the strength of the trend, depending on how you're looking at it. So those will be coming out here before too long as well. So keep watching for that, right? Let me see here. Let me see. So for Litecoin as an example, I'm looking for a move to the 500 MA around $100. I tend to sell too soon when I'm in something good. So setting targets is something I'm trying to work on. Yeah, exactly, guys. Most people, they don't want to set targets, or they want to leave their position in it, even if it goes past their target, because they're scared. Oh my God, what if it goes off without me? What if it continues up without me? Fear of missing out, right? It's emotional. If what you're doing is emotional, and that's emotional, you shouldn't do it, because it's going to lose you money as a trader over time, right? Like I said, the key to successful trading is to consistently lock in profit. It's not to swing for the fences. It just get in profit and lock it in. Scott Melker is fond of repeating this thing that I taught him when he was first with us, because he was with us from like day one in the very beginning. And one of the things I told him was, he had an issue taking profits, right? Like everybody else. I had that same issue when I first started. And I said, listen, man, this is the way I learned to do it myself. This is the way I broke myself of that habit. I said, just take profit, no matter what it is, at 3%. If you're up 3%, take profit. I don't care where your target is. I don't care what anything else is going. Take 3%. Do it again and again and again and again until it becomes a nothing burger to you, basically, right? Until it's something that you don't have to even think about doing. That's all you got to do. You have to train yourself. Remember what I said? Discipline, consistency. Discipline is getting out at 3% no matter what's going on, no matter how far that thing's rallying after that. It's getting out time and time and time and time again. Consistency is doing it every single time. That's how we create patterns in our life. So if you're a trader and you struggle with taking money, with taking profits, and you notice a lot of times either it won't get to your target, it'll stop like right before, and then it'll go the other way, and you won't get out. Even though you're looking at it, go, man, it's probably going to go and hit my stop loss. I need to go and get out and lock in some profit. And you don't, and it liquidates you or hit your stop loss or whatever. If you're struggling with that, if you're struggling with it's going past your target and you don't take profit at some point and it goes back against you and then it's back below your target, right? If you're struggling with these things, do exactly what I told Scott to do. It's exactly what I did. I'm going to tell you, it's a life changer, guys. But a lot of people won't do it because that means, oh my God, I can't make $1 million tomorrow. What if I actually got in a good trade? And what if it went up 50%? You telling me to get out at 3%? I lost 47%. You didn't lose a dang thing. First of all, you don't know if it's going to do that. All you know is if you're up 3% and you take your profit, you locked in profit. It's the thing you're struggling with. You guys see what I'm telling you? The biggest issues you have are emotional and psychological. They're not the systems and whatever. It's doing what has to be done when it needs to be done. And I guarantee you, if you're having trouble doing it in trading, look in life. I guarantee you will find that you have the same problem in life. Got to work on that. Because the more you can get it generally throughout your life, the easier trading is going to be for you. The happier you're going to be as a trader, the more profit you're going to, bring in, the less losses you're going to take, the less stress you're going to feel. All of a sudden, trading is going to become this great thing that you really enjoy doing, but that you don't feel like you have to do 24/7. Okay? You lost about $13,000 overnight a few years ago by using cross margin with no stop. was up 100% that night and wasn't smart enough to take the win. Yeah, man, it wasn't about being smart. It was just the emotion. See, this kind of thing, guys, this emotion, the psychological side, this is what I am helping our mentor program participants go through. I talk about it all the time, but we are directly addressing that stuff and working on ways to get through it. That's what this year long, that's why this is a year long. I could have gone in there and said, listen, mentor program is going to be 12 weeks, that's it. That's usually what they are. But that's doing you a disservice. I want you to be able to, it's because you're going to fight it at first. You're going to fight these things at first. I want to make sure that you're still in it so you continue to hear them. So when you're done fighting, you actually do them. Then it takes time of doing them before it becomes consistent. And then once it becomes consistent, then it becomes, okay, now I can see the results. I can apply it without worry, do these things. These are my results. And that way you see, okay, yeah. Otherwise, you guys are in for 12 weeks. I tell you the things you need to hear, but we really don't make sure that you kind of get through it. Because at the end of the day, again, as I said at the beginning, all I can do is lead you there. I can't force you to do the things that need to be done. These are decisions that you have to make. And they're not easy decisions. They're not. Trading is simple. It's not easy. Life is simple. It's not easy. If it was, everybody would be doing it, right? Fibosani says when people ask him for book recommendations, they are psychology books and not trading books. Go figure. Yeah, exactly. Yeah, people ask why you took profit there, wherever it is. Yeah, because my system says to. Exactly. You stick to the system, right? Exactly. All right, guys. Let me see. Let me jump here real quick. I wanted to talk about, what chart did I want to talk about here? We can look at the... So everybody and their grandmother, it seems, is talking about on the S&P or whatever. Let me see here. I think they're talking about this, right? This kind of resistance here, right? Everybody's on. And they go, oh, look, it was rejected here. Oh, yeah, it was rejected. But if I'm looking at this, and again, when I look at it, remember the Dow is already broken above this mid-August swing high, right? The S&P here, the Dow, NASDAQ, they all look pretty similar here. I mean, you got 1, 2, 3, 4, 5. Looks like a leading diagonal here. 1, 2, 3, 4, 5. So it looks like an ABC. And the Dow already broke out above it. So if it's an ABC, I mean, it's 3 waves down, the Dow is done, right? I mean, so that's corrective. So if we can see, the S&P and the NASDAQ do the same, that kind of confirms that breakout higher, right? So my count kind of looks like this. And so off the lows, we've got 5 up, and then we've got this flat correction, right? So the flat correction hits just beyond the 50%. It finds support of the 50%, right? Makes sense. This rally up is a 1. The pullback hit 50%. Right here. Why wouldn't you expect to find support right here? Look at where it found support, guys. Look at where this is finding support. Completely across here. Support, resistance, support, support, resistance, resistance, support, support, resistance, support, support, right? This is a significant area. It's been a resistance support flip here since May of last year. May of last year, guys. It's 7 going on 8 months. It's a 50% pullback on this rally, which looks like 1, 2, 3, 4, 5. So we're looking for a breakout here. And if we do, that gives us a minimum expected wave 3 right here at 4303.75, just prior to wave B, which means you get your 3, you get your 4, and you get your 5. And guess what? Now you broke out above it. And things start looking pretty interesting then. Why would that signal, if this is an ABC, why would breaking out above wave B signal that the bottom's likely in there? Because an ABC, a 3-wave move, counter trend, right? This is the trend on the bigger time frame, right? Counter trend, 3-wave move is corrective. And it gets confirmed when you break out back above that second wave. Why? Because you can't, if this was to be, say, a 1, 2, 1, and you thought this was a 2, well, wave 2 can't break out above where it starts. It can't go back where wave 1 starts. It has to stop before wave 1, where wave 1 started, and then break down lower. If you break out above it, it's not a 2. So this becomes an ABC. And again, a 3-wave move confirmed with a breakout through that wave B would be corrective. Now, the other possibility, there are some possibilities, okay? So like I said, even this doesn't guarantee. I said it increases the odds, right? So what other possibilities might there be? This could be maybe a... Well, if we're going to break out above here, this would have to be a WXY, which is, or, you know, an ABC as a W, okay? And you'd look like an ABC as an X, and then you have an ABC down as a Y. That's a possibility. But if it breaks out above the all-time high, that's not what's going on, right? So again, you don't have to know for sure whether we're going to get a breakdown below the swing low here or we're going to break out above the swing high, right? On the all-time high. All you have to know is likely we're going to continue up through here and potentially through wave B. And as you do that, you can look over what's going on with the price action here and decide, does that look like a wave X? And if it does, well, okay. So then you look for 3 down. But you're not paralyzed sitting here going, oh, I think it's got to go down, so I'm just going to not make any money. I'm a trader, but I'm not going to make any money. I'm a trader, but I haven't bought in, whoops, and put that in there, in 99 days. I'm a trader, but I ain't traded 99 days. 3+ months, but I'm a trader. You aren't a trader. You're a talker. There's no reason. If this thing's going 3 months here, there's no reason you shouldn't be trading this. But you get so, retail traders tend to get so consumed with the larger trend and all the fear mongering and whatever else they hear, all the news that goes out that they don't really understand anyway, right? And somebody comes on, some big account goes on and says, oh, well, historically, when this happens, it usually means this is going to happen. Well, yeah, sure. So what? In the meantime, make money. If you're a trader, you don't care what this is here. All you care about are your local, what you're trading there, right? If you're trading based on the daily time frame, you should still be trading. This is 3 months. 99 days. 99 days. Why are you not trading? Oh, because I'm a swing trader on the larger time frames. No, you're not. You're an investor. You're a shorter time frame trader, investor. That's what you are. And you still missed the investment. You still missed 3 months. Oh, but you know, there's a big one here. Then why are you looking at the daily? Might as well get on over here at the weekly. Might as well get at the weekly. Why are you looking at the daily? Well, because I want to know what's going on. Why do you want to know what's going on? You said you're an investor. That you said this is the trend you're watching. Get on the weekly. There's no reason you should be looking at the daily. You see, that's causing the confusion. Either people say they're traders, but they're not really. So cognitive dissonance in their head, which makes it difficult to make the decisions you have to make. Or they don't know what they're doing at all. They don't know what they are. Period. End of sentence. They don't even think, they're traders or investors or whatever. They're just scared and paralyzed by fear because what everybody says in the larger, if we look, decade by decade, then usually when this happens, well, yeah, so what? It may happen. That's going to take time. That's going to take time to play out. Are you telling me you're just going to sit on the sidelines and not make any money? Because guess what, guys? Guess what? Let me see here. I'm going to keep saying guess what till it gets up here. Doggone it. What the heck? No, that isn't what I meant to do. All my layouts. That's what I'm looking at. There we go. See, I can't get used to this new thing, guys. So if you're sitting on the sidelines, sitting in cash, because you don't know what's going on, right? Guess what? Your cash has been losing value for 117 days. You're sitting on it, and it's losing value. What are you doing? What are you doing? Are you a trader or not? If you're not, that's fine. Understand what you are. But if you tell me you're a trader, what the heck are you doing? If you're not taking profits consistently, what are you doing? Let me see here. All right. Chess Coach Joe, what's up, man? Good to see you here. Oh, it used to be Common Man. What's up, man? Good to see you checking in, buddy. So, again, are you a trader or are you not? If you're a trader, shorter time frames, stop worrying what the bigger time frame is. The world could go to hell in a handbasket. It could do 1930 to 32 all over again, the Great Depression. You know how many millionaires and billionaires were created in that time? At that time. When the dollar was worth what it was back then. That's worth a lot more today, right? But eventually we're built there because people understood. They understood how to trade that down. They understood how to take positions at or near the bottomish area, right? And to rally back up. You don't have to sit there and hold it and wait till the trend reverses. Why? Why would you do that? Why would you miss all the opportunities? Sit on your hand for a year, 2 years, whatever it is. Traders make money. They go out and trade, guys, right? That's what they do. So again, I ask you, are you a trader or not? Let me see here. Dot. So I've talked about this a bit. I like this. Look at this. Again, this area of support or resistance, right? Rallied up through it impulsively, came back, checked it as support. Look at this right here. 1, 2, 3. That's 3 waves down so far. If we break out above this, that looks like it's corrective and we're heading up higher. If we're heading up higher, based on that right there, minimum. I mean, we don't have to read anything else. Minimum, we assume it's a wave 4, and we've got a 7.116 target. Simple as that. Now, if this were to happen to be a 1-2, well, hey, there, it's going to go up higher, but we're at least going to get there. Now, I think that's probably a pretty good target because of where we are here. High volume node. Look at this. Just got some wicks above it. That's a good target area. And so the other thing I look is I go and pull it back and say, okay, well, if we're at that, whoops, God dog it. I want to see where would that pullback be? If this is going to be 5 waves up here, right? 50% right here to this area again. Will give us a 1, 2, right back up. Which, by the way, wave 2 pulled back to wave 4, which is what we normally look for anyway. So the idea being maybe we've got like some... Now, what I don't like about this is we would potentially have some small wave 2 compared to this very large wave 4. It happens occasionally, but I'm always iffy about it until it proves itself. So how does it prove itself right now? I want to break out above this swing high here at 6.221. Gives me a target up there around 7.115. And then I want to see a 3-wave decline back down here toward about 5.67 or so. Toward that area. It could stop a little bit earlier. It could stop right here around, maybe 5.8. Something like that. But I want to see a 3-wave pullback to this area here. And to see if we can get a rally back up. And then we'll look for the same thing. Does it break out above that second wave on the breakdown? 1, 2, 3. Let's break out above that. If we do that, should be looking further up, right? Tail, what's up, man? You're late? Yeah, you're late. That's okay, man. I got to get out of here soon. Let me see here. So, there's Dot. I want to check out, like I said, I got to go here. I thought I had a GBTC chart here. Let me see. Because, again, Genesis, everything else going on with that, right? Oh, here we go, right here. So, again, I was warning people not to sleep on Sol. I was warning them not to sleep on GBTC. I said everybody was way too down about GBTC. Everybody swore down here. Everybody was swearing that it was going to go down, that they were going to have to liquidate, right? And, again, as I said at the beginning here, that made no sense. The money is in the management. And that management is $300, $400, $500 million a year. Worst case scenario for GBTC would be that it would be sold, right? That the company itself would be sold so that somebody else could make them the fees off that management, right? That's where the money is. Now, if the value of Bitcoin happens to go up in the process, guess what? You're about to have a whole bunch of new people in there and you're about to make a lot more management fees, right? But look at that. Look at that beautiful move down. Look, this is clean. This is a clean wedge here, guys. And we got expansive move. We got a huge candle spread, spike of volume here, right? Let's get everything else out of the way just so you can pay attention to this, right? Look at this. Volume way down here, the candle before, the breakout candle, huge. Twice the size at least. Right? Now we're getting some rejection, some resistance right here. Well, that makes sense, right? Look at it. Look where we're at. Of course we are. Now, nothing here guarantees that we can't go down lower. But again, if I'm looking at this, 2.618. When we look at wave threes, we look for 1.618, 2.0, and then we start looking at 2.618, 3.618, 4.618. 2.618 almost to the dot. That pullback, what do we usually look for a wave 4? 38.2, right? And then a 50% is a secondary target, right? Look at this right here. 38.2 pullback. So if I had to look for a wave 5 target on GBTC, minimum of this 1365 kind of area here. Now the question is, if we get that, then what kind of pullback are we looking at? And I want to make sure, first thing is wave 2. We look for wave 2 to pull back to wave 4. That's our initial target always, right? Could pull back further, but that's where we look anyway. 50%. Perfect. 1, 2, 3. 3 gets through the gap, gets through the weekly pivot. Third wave is usually the strongest, right? That's usually where you go through your major areas of resistance, right, or support. Look at this. Look at this, guys. Look at how perfectly this lines up. Minimum. That's, I mean, if we just hit where we normally expect to hit, look at what we're doing here. The wave 3, the big strong wave, pushes through the pivot. We come back, we retest the pivot area as support. We fill in this gap on the breakout, come up. We rally up into the next gap. That gives us a wave up, right? So where does wave 2 go? Wave 2 is this area right here, right? Could see a wick down to the 50. It might just get 38.2. It's right there at the wave 4 area. Because you build this right here. This becomes a buffer. As price comes back down, you've got all this, this, whatever it happens to be here, whether it's a ABC, right? Or whether it's a flat, so ABC gives us A, and then A, B, C gives us B, and then 1, 2, 3, 4, 5 gives us C, right, before it goes back up. Or whether it's a triangle here. What you're doing is you're building a base here, which is why when you come from wave 1, it usually finds that wave 4 area as support. Because you've got all this price action happening in there, all these buyers happening in there. They buoy it as it comes into it. They're taking off that supply as it's getting sold into it. So yeah. Now, wave 3 could overextend up here, right? Wave 3 could hit the, the secondary target, which is our wave 5 target, right? Right here. And so then, wave 3 could be up here, right? Wave 4, then maybe we get the 50% down to, again, the pivot area, right? And then wave 5, watch where wave 5 hits. 1618. This is what I think is likely to happen. Why? Because when we trade pivots and we get that breakout through the pivot, it usually rallies the R1 and pulls back to the pivot. You usually get 5 waves up to the R1, 3 waves back to the pivot for wave 2, and then you break out on wave 3. So this would get us slight overextension on wave 3. Wave 4 gets us a little bit longer, and that's because there's a slight overextension there, right? A little bit more effort on the push, a little bit more selling on the downside, come down to the pivot, rally up here, and now all of a sudden, guess what? Now all of a sudden, you've got wave 1 up here to this R1 pivot, right? Which, as you can see, this area has this bit of this high volume node here, right? And now look, now it's the 50%. So You got wave 4, and it's a 50% retracement. That's as clear a wave 2 as it could be. A lot of money to be made on this, I think. Right? It is a very nice chart. I agree. I didn't like Gala. You said you still like Gala. Yeah, it didn't do what we were looking for it to do on there, but we knew if it dropped down below that level, it was going to invalidate the triangle pattern, right? I mean, I don't like Gala. I don't know anything about Gala. Somebody asked about it on the thing. I liked the setup at the time, but again, the invalidation was the breakdown through that level right there in the triangle, which would invalidate the triangle, right? So yeah. Anyway, I got to get out of here, guys. It is already 12:42. I'm already over by 12 here. I've got our session with our mentor students. You guys that are in here right now, I will see you guys. I'll post the Zoom link there probably around 10 minutes before. All right, so I'll see you guys there in about 45 minutes or so. I'll post the link probably in about, what is that, 35 minutes? Yeah, that's it. I can't think. I can't do math right now. And then we'll talk about some stuff there, for our session today. As always, everybody, man, I appreciate you guys, seriously. I wish I could do more trades here, more charts here. And, we're looking at different ways to approach that. So, if you're not subscribed, subscribe to the YouTube channel, subscribe to the Twitch channel, hit the thumbs up, the likes there. I appreciate that just because it helps with the algorithm. Again, guys, I don't talk out of my rear end here. Things I talk about are legitimate, it's legitimate trading, right? I mean, this is the real stuff. It's just trying to get it out there ahead of the fake accounts out there, right? The people who started trading yesterday, but don't really know what they're doing, right? But they got good marketing. So I'm working on my marketing this year, guys. Really taking it seriously this year. But anyway, so there we go. As always, remember, the only thing you control in the market is how much you lose. So please keep working on the risk management. You guys can follow me there on Twitter at TX West Capital. You can follow me on Facebook and on Instagram at Texas West Capital. By the way, I'm going to have a professional page put up, personal professional page put up there on that you can follow there on Facebook as well. That'll be at Christopher Inks instead of Texas West Capital, but also have Texas West Capital there as well. So just some various places you guys can follow us, and we're going to be producing some serious kind of crazy content over the next year. A lot of different areas, a lot of different places. So hopefully you guys will be following along and grow with us, and really, really looking forward to the possibilities this year, guys. I think there's a lot of possibilities. I think the markets are bottom. They seem like they likely are. They're checking off all the boxes. But guess what? Even if they aren't, there's so much money to be made no matter which direction they're going. Stop worrying about the Bitcoin that you made, is going to go down in value, okay? If you're worried about that and you want to know how to create value, how to make more of it, join us right now. howtotradetowin.com/T3, and you can get a month of tier 3 access, guys. Normally $200, you can get it for $19.99. And I'll tell you what, we'll pop you a deal toward sometime during your month there. It's going to be an amazing deal. And if you want to take it, if you like what you see, you're trying it out. If you like it, you can take advantage of the deal and have like a serious discount. But, if you don't, that's okay. I'm not going to sit there and hound you about it. It's okay. It's up to you. Decide what you like. Decide what you can do, right? But honestly, guys, if you want to do it all, if you want to be more than you thought you could ever be as a trader, I'm telling you right now, join us with the LMT program. Immediately, you'll get a system that actually works, as our people are telling you, every day. Works every day. People get money every day, guys. It's not a difficult system to understand. Takes a little bit of practice, but it's all out there for you. And then on top of that, we're going to work with you with everything else psychologically and emotionally over the next year. And so much more in it as well. Plus, you still get tier 3, which means you get to learn about the greater market structure, how things work on that. The things that I've learned over the last 25 years, 27 years of trading. And now, if you're in tier 3 now, you also get Fiboswani. So a lot of stuff going on there, guys. Man, we'd absolutely love to have you with us. I hope you take a chance and join us, and you'll see for yourself. You'll see, okay? But whatever you do, if you come in and you got questions while you're in about things we discovered, ask questions. I always answer questions. There's no better way to learn than to ask questions. If you sit there and you don't ask questions, how can you possibly learn? You're going to sit there confused about something that you're unsure of. And that's going to affect the rest of your learning. Ask questions, guys. Don't be afraid to ask questions. Okay? All right, guys. I hope you guys have an amazing weekend. Like I said, LMT, I'm going to see you guys there in at 1:30 p.m. Central Standard Time, so not too long from now. Everybody else, take care. Hopefully, we'll see you guys joining up with us. We'll welcome you in over there on Tier 3, even if just for a month, guys. Even if just for a month. You'll be so much further ahead than you've been, and it's cost you $19.99. Okay? Learn how to do these things correctly. And then you can go and, like I said, if you choose not to be with us, you can continue to expand on your knowledge, but at least you have a base of how to look at things correctly, how to do these things correctly to begin with. All right? All right, guys. Y'all take care, and I'll see you next Tuesday, 11 a.m. Central Standard Time, all right? Take care.